Welcome back, everyone. In today's video, I'm going to be sharing with you my portfolio by sector allocation. And I'm going to be talking a little bit about my thoughts and plans going forward and how I'm kind of viewing my portfolio, what needs to change, and what is the plan. So recently, I've actually been very busy, but none of that is in the market. As I said in a recent market update video, I'm sitting tight. I'm kind of liking the bullish environment that we're in. And, we had a bit of a pullback after the last one. I think I top ticked that because GameStop started blowing things up, and that was fun. Anyway, so I've been recently thinking, while remaining bullish for now, thinking about different scenarios that could happen later in the year. So I haven't done much in terms of buying and selling, and that's why you haven't really seen me talking about much recently, more so in the thinking. So I just wanted to go a little bit into my perspective on markets. My opinion, or my strategy really, is to take risks that make sense and be willing to accept the volatility that you need to accept in order to make money. However, I don't really like trying to force things that are risky and might not make sense, and I also want to try to avoid giving back as much as possible to the market. Because there's more than one market cycle in life. Depending on your age, you'll be alive for many market cycles in different sectors and that type of thing. Also, I know that if someone's going to hold to the exact top, they're also going to be holding on the flip side of the cycle, and they're going to give some back. So, you could either sell too early or too late, and they can both amount to the same thing. So that's just how trading works. Certain people can believe that they're going to nail the top. They won't. So I know I won't, and I just have to factor that in. Now, as I said, I have time. I don't love gambling, so later in the cycle, I probably, if prices in whatever get a bit silly, I'm probably going to leave earlier rather than try and hold too long. That's just me. That's just what I do. That said, I am personally able to hold a position for a long, long time without selling if things are improving. So that's one of my strengths. One of my weaknesses is that I undertrade some ideas. So yeah, and very important it's very simple. The last thing in perspective is you hear people say, everyone knows, buy low, sell high. However, it's not what people do. People either buy high, hold forever, or buy low, never sell, or whatever. So there is a degree of activeness that is needed, especially in cyclical markets. I also, you have to recognize that the center of gravity also acts like a slingshot. If the markets are too low, then they will slingshot past where they need to go in order to, and then be too high. That's just how it works. Same thing if they're too high and they're falling back to gravity, they'll go too low. So that's just something to be cognizant of. So this picture right here of allocation is how I'd like to think my portfolio would look. Now, I'm not going to dwell on this for too long because I forgot one big thing kind of intentionally, just to show, this is me thinking of reasonable. But it's not as simple as this because there's some correlation. So I'm going to go towards that. Because really, even in the view I showed you before, there was a lot of things that kind of act like the same thing. You look at industrials and base metals and that type of ecosystem, really, they all act very similarly. So even in what I showed before, there's still more concentration than what I might like. Now this is what my portfolio actually looks like, and the market has done a better job than me of making me overweight uranium. By that I mean I didn't allocate this much to uranium. Interestingly, uranium hasn't been my best performing sector, but it was a large sector that has done decently well for me. So I'm overweight uranium, and in amongst my portfolio, that is one of a number of commodities. And I'll get to more of this in a second, but commodities have a higher risk profile and a similar risk profile in some respects, even if they are independent of each other. And so my portfolio perhaps is a bit on the higher risk end at this point, and that may be a bit of an understatement. Maybe not a bit of an understatement. Maybe it's a lot of an understatement. Now, in terms of correlations within my portfolio, this is a different look. As you can see on the outside, I put all the energies in orange, all of the cyclicals in red, and then you can see the other things. Agriculture is kind of different. It's kind of not exactly the same, but it's still a commodity. And then the different types of defensive cash, that type of thing, gold, and the dividend, the portfolio side. So here, you could kind of see very into the cyclicals and very overweight, that type of thing. Again, part of that by design, part of that by lack of trading. And yes, it is a bit much in uranium, but again, this is my portfolio, this is my money. I'm not running a fund right now that had mandates or whatever. And it's one of the places where when I was allocating to it, it seemed like one of the best risk reward setups on the market. And I didn't allocate 55 or whatever percent it is now in terms of the percent of the risk I was taking in my portfolio. There were some other ways that I had of spreading out that risk in different forms, whether it's by having other commodities in the uranium sector or different things like that, and just in general having less uranium, and it's part of it is performance based. But when I look at the market, there's a lot of market risk in my portfolio. There's a high beta sector, but in order to try and you look at the Stan Druckenmiller, put all your eggs in one basket and watch the basket very closely. This, I guess, is my iteration of that. It's not all the eggs, but I, again, don't love going all in on things. I wouldn't go all in on things. It's not in me. But then there's the Buffett quote of diversification may preserve wealth, but concentration builds it. And I'm trying to be in the building stage of life, which leads me to my problem. And that is that there's a lot of energy, a lot of cyclicals, and those kind of, in some ways, have very similar volatility factors. And so it's been very nice to be that way recently, but I will need to manage this. And I try to be data driven. I try to look at what's going on and follow that. And as I said before, it's been a very nice market recently for risk, for cyclicals, for that type of thing. Big bounce off the bottom, been very nice, but if recently it's starting to take up more and more mental real estate, if you will. I'm thinking more about some of the risks that are in the portfolio and how I should or can rebalance. And so I think I'm going to, in the coming months, and this is again not urgent because I think that the market is, for now at least, in a kind of bullish move, but over the coming months I'm going to try and cycle out of some of the lower conviction positions and move that into the not giving it back phase. And it's not urgent, but it's something that I'm kind of trying to think about in the back of my mind. Because from a risk perspective, I have to consider my portfolio looks like this. And even though there's very different theses amongst the commodity plus division, commodity plus cyclical, that is, I mean, I discount gold because it has kind of anti-cyclical tendencies, but even here, there's a lot of beta, a lot of market beta potential in the allocation. And by that I mean, you know, the market is largely computer or algorithm driven. And so while the commodities have lots of different sensitivities, market, you know, market risk, different variations of economy risk, whatever actually should move them, I have to consider that it's possible that computers or algorithms might say, hey, you know what? If there's inflation rising, buy commodities. If there's inflation falling, sell commodities. And that type of thing can move the portfolio all at once, even if it shouldn't. So I need to consider inflation as a big tide in my portfolio. And for sure, if there's the rising inflation, if that compounds, it's set up great. If there's not, well, you get my point. So as for my current outlook, look, you know, in March, we had a mega bust, big time recession, big time damage. So bounce back from that type of thing was inevitable. And, you know, that's why I was kind of looking at high beta. But now, look, we've had the bounce back. We've had the initial bounce back, and then, okay, that's where we are now. So the next question is this the big one? Big, you know, some people call it super cycle. Is it that or not? At this point, I don't know. I'm watching. I don't know where I'd have the odds, but I wouldn't say 80% yes. I would say less. I might have it 50-50, 60-40, something like that, one way or the other. But you know, I'm watching to see what things look like when things happen, because we don't know what things are going to look like when things fully open up, when everyone has a vaccine. Could be great, could be terrible. And so we have to kind of watch that to know what's next. Same thing, you know, on the inflation side. Does the inflation continue or does it not? Too soon to say. So one thing that I found really useful personally is to have portfolio targets, because I find, you know, if you're going to take risks, you need to, okay, well, what is your target return? And for me, that amounts to plus 45% from here by the end of 2022. Now, that is a lot. That is a lot when you consider what a reasonable expectation should be. Now, it was a ton before. When I set the target, it looked crazier than that. I still don't think it's impossible. It's a lot, but it's not. I don't think it's impossible. It mostly depends, because if uranium can be plus 100% from here, now that sounds like a lot, but in uranium, that's a good month. Just kidding. Or am I? I don't know. But anyway, so that's my target. If uranium's plus 100% from here and I could avoid other losses, I think I'll make it. But here's the wrench. My base case is that I will want to de-risk from some of the high beta sectors, because if I'm in high beta sectors and they do well, 45% is pretty simple in the next almost 2 years. And so the difficulty is that my base case is I will want to de-risk a bit to a lot, well, to about 33% more defensive by the middle of this year. Now, this could change. This is just where I'm thinking I will want to be then now, if you follow. But this will require a lot of trimming along the edges, a lot of positions that I don't have the highest conviction anymore, or some of the asymmetry has diminished, or that type of thing. And so it's going to be especially hard because there's a number of sectors out there that I look at them and I'm like, ooh, I want to buy. But, you know, they may be more risky sectors, and so that is going to be the challenge here. De-risking while allocating aggressively enough to try to meet the target. So some of you may be wondering, why do I want to de-risk? It's just the beginning of the super cycle. Why now? And, you know, as I said, I'm still bullish for the near term. But commodity markets are cyclical, and I know that if I don't de-risk at some point, I'll end up giving back a lot. And I'd prefer not to do that. And so, you know, I look at the last bust and I didn't have as much cash as I'd have liked. I was looking at things, I'm like, I can't believe how cheap this is. I can't believe how cheap that is. It was easy pickings of things that were very likely to win, you know, double, triple eventually, because the prices were too low, because that's what happens in busts. And so when I look now at many commodities, I'm looking at the prices as far less exciting. A lot of things have moved up. Some moved up substantially, and personally I prefer has to hope to moves in commodities. And there's a number of commodities out there that, you know, don't necessarily have to go higher. And it's very possible that if we were to get another 2019 style slowdown, that they could move substantially lower and potentially even too low given the future. So if that were to happen, I would like to be able to allocate to them in an asymmetric, more asymmetric manner. So, you know, if I have to worry about, you know, what might happen, because we don't know what will happen. And, you know, it's important for me to be able to have the capital to allocate if the market drags down things that it shouldn't, because there's a lot of correlation. And if the market starts dragging down, you know, copper, might drag down something else too, because people think of it similarly to copper. And, you know, things get cheap every once in a while. Pricing has cycles, things get cheap, and I'd rather have some capital to allocate if that happens, and, you know, maybe be in some boring utility if it doesn't happen, rather than just ride it all the way back down. And the last point I kind of wanted to make is that you look at, you know, inflation fears, and a lot of people will say, oh, there's going to be inflation, commodities will outperform. Yeah, the most part, commodities will outperform when there's inflation. But, you know, there's other ways to hedge yourself or defend yourself against inflation. And you look historically, you know, utilities are real assets backed by debt. Debt which inflates away, real assets which appreciate when money depreciates. Real estate, you know, when was there a housing bubble? When the commodity bubble was, because it's similar type of stagflation. You know, prices go up, backed by debt. You know, there's other ways to be more defensive and be inflation hedged. So I don't see a need to FOMO on commodities. But anyway, in conclusion, remember, I wouldn't be allocated like this if I wasn't bullish near term and really bullish commodities. But in the medium term, I am going to be looking at risk control more than I normally am, even if I think that the bullish environment is continuing. But remember, hope you enjoyed. This isn't investment advice. This is just what I'm doing, not suggesting that anyone else do this or take this type of risk or anything. I'm just letting you know what I'm doing. With that, I wish everyone a great day, and until next time, see you later.